I love Fibonacci extension. So I took one off the low here and one off the low. And I find this is the most powerful tool for levels. You get the rally, you get the pullback. I find the 618, if price comes to the 618 and then pauses and consolidates for a couple bars, we almost always go up and hit the 100% measured move. I'm expecting gold to potentially maybe have a little hiccup here, pause and stall out a bit, which is a good thing. And then I think we're going up to that 2700, which I've kind of been expecting for a long time. We could see that pullback somewhere down in this range if we have a bear market phase, just like we saw back in 2008. We saw a big pullback, 35% pullback before it takes off to the moon. And that'll be like the dollar collapsing, quarter after quarter, helping push commodities higher. So
the gold market continues to be an unstoppable juggernaut. It closes out the month and quarter near a record high, solidly above $2,200 an ounce. Some analysts have said that gold is attracting new momentum because inflation is less of a threat than it was. Last week, the Federal Reserve signaled that it is still looking for 3 rate cuts this year, even as it sees inflation holding above its 2% target. In this video, Chris Vermeulen presents his analytical approach to the market and his bullish stance on gold, while acknowledging the potential for market fluctuations. In his analysis, Chris strongly believes the precious metal market is primed for a new supercycle, similar to the early 2000s breakout. As the stock market peaks, he foresees a temporary stumble for gold, but will eventually rally, echoing its behavior during the 2008 financial crisis. Since 2008, gold has performed quite strongly during months when the Fed funds rate is cut, and given the anticipated monetary policy shift by the Fed in the second half, gold may continue to strengthen in the near term. Despite the prevailing downtrends, Chris holds the view that silver and miners may face challenges from the broader market once they break out. Between 2011 and 2016, miners and their profits plummeted by 80%, a figure twice the decline of the gold price. Presently, gold has reached new highs, and miners find themselves at levels reminiscent of the 1980s, representing approximately half of their peak in 2011. However, he remains optimistic about their potential for a strong rebound, potentially exceeding market performance. Reflecting on the past decade, silver outperformed the miners during the most recent reset in precious metals. In contrast, the miners beat silver between 2015 and 2020, when gold was last in a bull market. Chris forecasts a scenario where the dollar initially strengthens, causing market turbulence, before losing traction and driving increased demand for physical metals and cryptocurrencies. He anticipates significant market shifts in the next 6 to 12 months. Now, we present the clips of Chris Vermeulen's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
There's upside potential in the metal space. I think there's also going to be some downside risk that kind of need to dance around the market unless you just want to hold and ride it out. Depends if you're a trader or an investor point of view. But I mean, I like gold here. I think gold is still a great buy. I think maybe we can buy it at the same price or a hair lower a year from now. But overall, that'll probably be the last opportunity, I think, before we're, in the above the 3,000 mark, breaking through these levels here. The precious metal space more or less started kind of a new super cycle in 2019, very similar to kind of how it started to break out in the early 2000s. Then we saw a multi-year consolidation. And then we saw precious metals rally and do really well into the end of the 2008 kind of economic cycle, the stock market top. And I believe we're in the same thing. We've just had a multi-year consolidation. Everything's bigger and amplified now because the price action's moving up. But we're now seeing gold, silver, and miners gold's leading the way. Silver and miners are still struggling, but we're starting to see this run up. And then eventually, I think we're going to see the stock market put in a top, and then it's going to probably top out with gold. We'll see gold probably flounder and silver and metals and pull back. And they'll probably be one of the first to rally and take off. Like we saw gold during the 2008 financial crisis. It fell about 35%. I think gold, whenever it pulls back, is going to pull back somewhere down, somewhere into this area again. But then I think it's going to take off to a multi-year rally. And this will be one of those rallies that anybody in the precious metal space has been waiting for, which is gold miners go absolutely ballistic, more or less quarter after quarter. Prices are going up almost month after month. They're going up for years. So this is like one of those kind of, once, twice in a generation opportunity, I think, in the precious metal space. We're not there yet. Yes, the ship is taking off here for gold, but there's not a lot of conviction yet, just because silver and miners are still in a downtrend. They're just trying to break out of those consolidation periods that they're in. But even if they do break out and rally here, again, I still think they're going to get hit with the overall market maybe later this year. And then eventually they'll probably be one of the first to rally, as you just said, Kevin, is that they can take off for years and rally with the market and outperform the market, because people are going to be wanting to go to a currency. I mean, the dollar could have a huge collapse. And this is one of the things that I'm actually looking forward to or looking for is, I think the dollar back in 2000, the dollar, the stock market sold off, the dollar went up. I think we're going to see the dollar continue to take off, potentially get back up to the 114, 120 range. When all that happens, when the dollar goes up, that probably means the stock market's collapsing, people are liquidating. People naturally still see the dollar as the reserve currency, which it is, but they'll move to it and it's going to strengthen. This will put pressure on precious metals. But then once all that's done, I think we're going to see the dollar fall out of favor and people are going to be moving into physical metals. They're going to be probably moving into cryptos. And it's going to be the next major super cycle that could last 5-10 years for the for alternate currencies like gold, silver, and crypto. So I think there's going to be some pretty exciting times in the next 6, 8, 12 months, whenever the heck the market tops out and actually flushes down.
Chris Vermeulen emphasizes gold's stability and global defensive appeal, contrasting its low volatility with the significant daily fluctuations of silver and mining stocks. Drawing attention to the appeal of gold, he emphasizes its role as a reliable store of value amid market uncertainties. Silver continues to underperform within the precious metals market and has been unable to hold gains above $25 an ounce, even as gold prices hold near their record highs. Despite the disappointing price action, many analysts remain optimistic that silver will have its turn to shine in the spotlight. At the forefront of his advice is Chris's emphasis, prioritizing attention on fundamental market trends rather than being swayed by short-term news events. He asserts that these trends provide more reliable insights into future market dynamics. Let's get back to the interview.
Gold is holding up and making new highs while silver and miners aren't, is simply because when people buy gold, they're not thinking of just flipping it and selling it for a profit. They buy it, they keep it, they forget about it. They believe in it as an insurance plan. They want to own it for hopefully one day it skyrockets. And it's low volatility. A big day on gold, is 1%, 1.5%. It's not super volatile, whereas silver can move tons. Miners can move like 8-10% a day, the whole sector or itself, which individuals move even more. So the nice thing about gold is it's that global defensive play. It's a nice store of value. Investors can put large amounts of money into it and know they're not going to lose 30% of their value in like 3 weeks if there's like a crash or a wipeout. Like silver fell 65% in 2008. Yeah, it's a lot of money to lose, if you put a ton of money into it. So there's stability in gold, which is why it wants to keep going up and carrying its value and keeping up with things. I don't follow the Fed. I don't really care what they say, because it doesn't matter what they say. It doesn't make sense. Yeah, I don't trade it, and everybody reacts differently. No matter what they say, you never know how the algos or people are going to react. I think it was last week the Fed came out and said something, and I don't watch it. I didn't listen to it. I know somebody will eventually, or I'll see something that tells me what the Fed does. And somebody who's not even involved in the market said, "Oh, the Fed didn't raise rates." I'm like, "Oh, good." I figured that, but I mean, it means absolutely nothing. All I do is I tell my subscribers when there's a Fed meeting is prepare for some volatility. It's just a whole bunch of chaos, a bunch of emotional people thinking that they're going to be able to make money off what the Fed says. Just ignore the chop. It's just going to be a blip on the chart, and whether it signifies a top or a bottom. I mean, usually if the markets continue in favor, even if the Fed news goes against what we want, but the trend is up, we tend to see the market sell off sharply. And a couple of days later, it's recovered and it's going back up. Just follow the underlying trend, because generally a piece of news won't change a trend.
Gold prices have surged recently due to investor demand for diversification, wealth preservation, protection against inflation and geopolitical uncertainties, and the appeal of gold's simplicity and stability. Gold prices have climbed steadily this year, gaining approximately 6.6% year-to-date. Since late November, the price has been above $2,000 per ounce. It began to shoot up at the end of February and kept making fresh records this month. How do you plan to integrate gold into your investment portfolio to capitalize on its potential for wealth preservation? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.